Good morning and welcome to the Middle East section of the Global Energy Outlook Forum 2025. We've just had 3 amazing hours traversing through Asia and the outlook and perspective from that geography. Of course, the massive demand center, Asia, the source of critical incremental demand growth in last decades, really, not even years. And we're delighted to kick off the Middle East section with one of the region's most respected market actors, Sheikh Khaled Ahmed Al-Sabah, Managing Director of International Marketing at the Kuwait Petroleum Corporation and acting CEO of Kuwait Oil Tanker Company. Sheikh Khaled, thank you so much for leading off the Middle East section.
Well, good morning, Sean, and thank you for the Energy Outlook Forum 2025. Thank you for having me. Thank you for this introduction. Also, I want to wish everyone a happy new year. Hopefully, this 25 is going to be prosperous, peaceful, and good for all energy players and let's say globally.
Well, certainly, there's a lot to think about as we think about what prosperity for the energy sector, for an energy as a whole, might look like over the year ahead. And perhaps, Sheikh Khaled, we can just kick off with that sort of big picture question. As we sit here in early January 2025, what do you think the energy markets look like over the next 12 months? How are you preparing for what you think this is going to look like in Kuwait?
Well, as you know, Kuwait have started probably ahead of itself in terms of refinery. Now we have a capacity of refining capacity nowadays of around 1.4 million barrel a day, which we started with our CFB project, Clean Fuel Project. Product.
So are you now exporting more products than crude?
Well, we can say so for the time being until OPEC allow us to produce more. Now we can say we are one of the largest in the middle distillates. We are among one of the refineries in the world who've been producing IMO quality, which is 0.5 sulfur for the bunker grade. Also, in most of the products, we try to diversify our portfolio. So let's say we fulfill all our customers' needs and demands.
When you look at the decision, obviously Kuwait made many years ago to build this scale of refining capacity, and most notably the opening last year of the Al Zour refinery, now 600,000 plus barrels a day of high quality distillates. Is that market the vision that you had for that investment as you look out to 2025? Has it worked out? Is that, oh, wait, we were amazing. We saw that 10 years ago. We're going to hit the golden jackpot this year ahead with all of these products we now have the ability to deliver. Has the vision, do you expect this vision, the first full year of Al Zour, to be a very significant alignment of very useful forecasting on your part?
That's a very good question. As I said in the beginning, when we started the CFP projects in Al-Ahmadi and Min Abdullah, it was around 800,000 barrels. The CFP project allowed KBC to enter into a clean product. And now we can meet all the specifications that requires for Europe. The expansion or the new refinery in Zour of 615,000 also allowed us to have a bigger presence in most of the market. Now we've been, let's say, playing between first and second supplier of middle distillates products into Europe. Also in the East, I would say most of the clean products naphtha, LPG, and other products is let's say is well marketed to the Far East market nowadays.
When you look at the big changes in recent years, Sheikh, obviously your uh, investment and your capacity for exporting products has grown dramatically. As we have seen also in other parts of the region, Bahrain has upgraded its refining capacity. Oman, you have been a joint venture partner in the Duqm refinery in Oman with OQ. So we've had a significant scale up of products export capacity from the region. Where is that intersecting with the change in global energy flows, oil and oil products flows that we've seen in recent years with the Russian war in Ukraine? It's sort of changed the direction of travel of a lot of products, particularly middle distillates. Your thoughts on, as we start this new year, how those two things will intersect? A huge capacity increase in the Gulf of export of products and this change of global flows due to the war in Europe.
Well, as you know, Sean, that although the oil market is going parallel with the political situation worldwide, and any let's say political situation, geopolitical, always would affect let's say the oil flow. So stopping or let's say banning the Russian product from going to Europe have given a good place for other players, and one of those is KBC. Uh, while we keep the flow going in a global way. Just to simplify this one, I would say nowadays the Russian crude mainly goes to the east, and vice versa. The product is going to Europe. Our strategy in KBC that we diversify, we keep our contracts, let them be more solid, keeping our reputation as a reliable, solid producer, regardless to market situation and political situation, have given us a profound, let's say, stage of having a trust between us and our customers. The market will keep changing. GDPs and the growth in many areas have been changing, ups and downs. Nowadays, we see a new administration in the States that might also affect the supply. Our role in this market is how can we mitigate this? How can we, let's say, find a way to keep the market well supplied
well, if we take, for example, Africa as part of this equation, right? We have the Russian products are finding a home now, a new market, like you're finding maybe in Europe, they're finding in Africa. We've got the Dangote refinery opening now in Nigeria. This will be the first year with that open, and obviously the first full year with your big refinery opening. And I know Africa has always been a destination, a target market for you, and is for the future. The population of Africa due to double over the next 25 years, a big market, economic growth there. So how do you see all of those different suppliers coexisting in the African market and your place within it? Are you finding East Africa is going to be your place, or South, or how do you think it looks, Africa as a market destination?
Well, of course, the Nigerian refinery will take some market share in Africa, but mainly probably will feed Nigeria itself in terms of product. But
which of course is a big market itself, 200 million people.
Exactly. And in our case, we've had a good market in a lot of African countries. We are, let's say, in some of those, we are the sole supplier. We'll keep maintaining those market shares. There is big opportunities in other countries, which we are pursuing for the time being. We have teams who are in constant, let's say, relation with those countries, see what we can develop. And that's one of the, let's say, the targets that we are heading in 2025, the African market also.
Looking at the logistics, Sheikh Khaled, of course, acting CEO of Kuwait Oil Tanker Company, we've seen in the year last year, 2024, a lot of challenges on the high seas, most notably the Red Sea, some turbulence there forcing shipping around Africa and so forth. What's your outlook for the flow of shipping and the challenges given some of the obstructions in the shipping lanes? Your thoughts on the outlook for shipping in 2025?
You know, in Kuwait oil tanker, this is not the first, let's say, uh, events or situation that we
For
have.
better or worse, you have experience.
That's what we are here for. If you remember years ago, we had this piracy issue, and we had to deal with it just to keep our tankers going to there. We've had some issues, as you know, in the Red Sea. There has been some incidents with a couple of vessels. We tried to divert our vessels going to Europe instead of going to the Red Sea, sometimes through Cape. We have, let's say, 24/7 risk management team who are, let's say, assessing the situation day by day, minute by minute, to make sure that all the tankers are safe, the sailors, and that flow. I would say there were some challenges going to that direction, but so far everything went fine, and we believe nowadays it's even easing up more than before.
You know, the other part of the shipping challenge of 2024 was the massive growth in what has been called the dark fleet, the fleet that is supporting and facilitating what is defined as sanctioned oil by the G7, most notably Russian oil and also Iranian oil, and these are defined by under sanctions by certain countries, by certain groups of countries, but ultimately it has resulted in creating a sort of a parallel shipping corridor, if you like, with parallel insurance cover and other things. I wanted to get your thoughts on the outlook for that, the coexisting of this sort of so-called dark fleet in 2025 with the not the regular fleet, or whatever would be the appropriate term for all the other tankers shipping. Is this a challenge? Is it a problem? Is it just another hurdle? Your thoughts on the outlook for the coexisting of the dark fleet and how it impacts the market?
Well, Sean, this is a really quite a good question. Honestly, the dark fleet, nobody can neglect the presence of this fleet. It's existing. It's transporting oil to some destination. I believe it's been growing because it's growing along with the sanctions. Any sanction will go indirectly to the dark fleet. I
It doesn't
believe
seem
that
to be
there should be
stopping
a
it
way.
nonetheless, right? Lots more sanctions, but
Uh,
still no disruption.
Exactly. It wouldn't, since the insurance companies and those fleets cannot, let's say, act in the maritime in the official way, it's going to go to the dark fleet. I strongly believe that there should be a United Nation kind of global insurance that would cover those and keep it under control. Nobody can deny their existence. Uh, as long as there is sanction, there gonna be this dark fleet, let's say, transporting and moving oil from one point to another. So I believe that there should be a way of, I'm not gonna say controlling, but at least having boundaries to those in terms of insurance and all other types of maritime to this activity.
What do you think is the consequence potentially if indeed this is let to continue to grow and be somewhat out? I mean, we've got ships who are turning off their responders, tracking devices, and etc. Obviously, ship to ship transfers in the middle of the sea. There's ports that are accepting uncertain insurance documentation. What do you think is the risk here if this continues and continues to grow in 2025?
There is, to be frank with you, there is a huge risk in this one. I mean, any collision, any accident, any spillage would happen from this dark fleet. It can affect the environment. It can affect the maritime. It can affect, let's say, the insurance. Which we have to be responsible in facing this issue in a different way. We can again, we cannot deny their existence, and if we don't find a way, let's say, for those vessels of dark fleet to be controlled in terms of insurance and every other aspect belong to the maritime, I think it's going to be quite challenging to be resolved. If there is any accident between, let's say, a normal vessel which is insured and a vessel from the dark fleet.
And there was a collision in the Straits of Malacca this year, or last year rather, 2024.
Exactly. And that's why I think we have to go ahead of ourselves and find a way how can that probably can be prevented or controlled under international umbrella, so we don't let things, let's say, slip off our hands if we can't solve it in the beginning.
The other big development for 2025, Sheikh Khaled, is Kuwait Petroleum Corporation, KPC, are setting up a trading firm. It's already underway. I wanted to get your thoughts. Obviously, KPC Trading, I think that is the name. I'm not sure. Maybe you can tell us the exact name of this new entity, but it's joining the community of other NOCs in the region, which have set up trading firms over the last decade. Just tell us, start a little bit about KPC Trading, why that's happening now, what you hope it can bring to you as you get underway in 2025.
Well, Sean, I knew that you were going to ask me this question. I know that you know most of the secrets even before they become a secret. Yes, KBC have established KBCT, which is Kuwait Petroleum Corporation Trading Company. We already have a place and we have an office nowadays in the IFC in Dubai. We started, let's say, doing and finalizing all the paperwork to this trading house. Now we are finalizing the back office, the front office also on the way, and very soon we're gonna have a conference introducing this trading company to our fellows, which I'm sure most of them they are well known about. As you know, in the Gulf area, most of our neighbors and pillars and friends, they started the trading. I'm talking Saudi Arabia, Qatar.
Aramco Trading's now more than 10 years old.
No, yeah, all of our friends have started this one. And we've been having this idea for quite some, long time. KBC marketing have been doing sort of trading. We've always had the FOB sale and we had the C&F sale. We've been selling in all types of FOB, C&F, and any other type of let's say, marketing. Yet nowadays, we decided just to go on a full-fledged trading company, which will start by itself in the beginning. So KBC Marketing will stay there until this company, let's say, start fully. It's gonna start partially with the Dugum products and third party along with KBC products.
And when you think of that as a new part of the KPC value chain, what do you hope it brings to you and to KPC that you don't already have?
Okay, as you know, the market have been, let's say, evolving in a speedy way. Risk management tools, hedging, all other types of trading, it's a different style than the sell and purchase that we used to be. Having a full trading house with all this risk tools, which we can probably optimize in the way that we sell our products. So now we're gonna, let's say, go for the last cents of whatever we can optimize by selling the product.
And when you think of that now within the context of the group of NOCs, Aramco Trading, ADNOC Trading, ADNOC Global Trading Products, and ADNOC Trading Crude. We've got OQ Trading for many years, which was incubated by Vitol. Now Bapco Energies, incubating with Total Energies in Bahrain, etc. This whole collective, how do you think that's going to change, is changing the market? How do you expect the big international energy trading companies like the Vitols and Mercuria and Trafigura and all of these, which have played such a critical role and
Yeah.
partnership with you and all of your peers for many years and decades, how does this change the game? How do you expect them to react, coexist? What does it look like, do you think, going forward?
Okay. I think the market is big enough and can take all of us in the oil market. Uh, for NOCs, probably we have one privileges and in terms of that we have the refinery, we have the oil, we have a base customer, and also, and this is the first thing that I should probably mention is we believe in our people and their capabilities. It's going to be a good competition among all those. Yet, I think NOC will have a bigger, let's say, presence in the years to come in acquiring and keeping the market share that we have. Nowadays, we are selling a lot of products to the traders. We'll keep doing that as long as it give us the best netback. Yet, by having those risk tools that we have, we can probably accommodate more options to the customers. We've seen all the neighbors and companies that you just mentioned, how they are performing. And throughout the meetings that we've had, most of them, they encourage and they saw there is a lot of optimization in their netback through the trading company.
Do you
So
think, on speaking on the point of talent, will you, how are you facing the challenge of attracting the talent? You see oil traders around the world, some of the best and even not the best, making millions and millions of dollars of compensation, bonuses, and all of the big stuff that Wall Street and the City of London are well used to. Are you going to be able to compete in that space for the best talent and the compensation that goes with it?
I'm sure we will. I'm sure we will. As this is this market that you have to go and adapt yourself to this market style. Uh, as I said, we believe in our Kuwaiti fellows, which they can handle things. But that doesn't mean that we're not gonna, let's say, hire and get some of the expertise that which a lot of traders have. We have some gaps in the risk management tools. Currently, we're not doing hedging in KBC. Through the trading, we can have more, let's say, activity, which might facilitate things to our customers. Also, will enhance the netback to Kuwait.
Looking at the final subject, the last but the best, if you want, from the subject point of view, all things OPEC. You mentioned it in your opening comments. If OPEC allows us bigger quotas, we'll be able to maybe do some more. I wanted to get your thoughts looking forward. We're now in the fourth, fifth year of this OPEC Plus agreement. Kuwait has just announced a spending of $30 billion to expand, to invest in its oil infrastructure and production capacity. Your outlook for the year ahead, let's start with OPEC Plus sustaining its cuts program and at the same time expansions like your own and UAE and others.
Well, I'm not gonna speak on behalf of OPEC, which I'm
No,
sure.
no, no. But Kuwait's perspective.
Yeah, yeah. But what I'm trying to say in here now, KBC's strategy is to increase the oil production to 3.5 from 4 million toward 2035, 2040.
From what now?
Well, now we are almost 2.8.
And you've been there for a long time.
Yeah, well, I cannot reveal everything, but
no, of course, but that generally you've been sort of status quo for many years.
Yeah, yeah. Nowadays there is an ambitious plan, along with our Kuwait Oil Company, which is the production company in Kuwait. They have a very ambitious plan, and I think we're gonna reach the target that we've been talking about. OPEC have been trying to balance the market so there isn't over supply to keep at least the prices at a reasonable level. And they've been successfully doing that quite well in the last couple of years.
On that sort of final point, your expectation for the year ahead on the oil price, we've seen the average in 2024 come down to about $80 a barrel. That's clearly very acceptable. On Brent, $80 for 2024, closed the year at about 75, but nonetheless, it averaged for the year at about 80 because the higher prices in the first half of the year. What would be your forecast expectation for the average for 2025?
As we said probably in the beginning, Sean, it's the oil goes parallel with the political situation. If there hasn't been, let's say, huge changes in geopolitically, no wars, no sanctions, no, I think 75, 80 will be the norm. If something came up, I think we might see different things. Also, it depends on the tariffs, and we have the new administration in the States, and that might change a little bit some prices. Depends on the flow from the States, all the projects, FID, we're going to see more production. All that might change, but so far, I think 75, 80 will be the average that we see in 25.
Well, we'll wrap it up there. Thank you so much. What an excellent interview to kick off the Middle East section of this journey around the world with 50 plus analysts from every corner of the globe. We're now going to spend a few hours through the Middle East looking at all of these subjects that Sheikh Khaled has put before us. But first, thank you so much, Sheikh Khaled Ahmed Al-Sabah, Managing Director, International Marketing at KPC and Acting CEO of Kuwait Oil Tanker Company. Shukran.